Welcome to Hacker Trading. This is Harry Swaminathan, and in this video we're going to look at the straddle trade. Now, the straddle consists of a long call and a long put, and it's usually done at the money. So what we're looking at here is Priceline. Priceline is currently trading at about $631. So the closest at the money call and put would be the 630 strike price. Now the 630 call is slightly in the money. It's in the money by about $1.30, and the 630 put is slightly out of the money. But in general, you'd put a straddle on at the same strike price and you would put it at the money. So this is what our straddle looks like, and we've got the Jan series. We've got 10 contracts of the 630 call and the 630 put. Now I'm going to change this to the December series first. In a straddle, you're going to pay for the long put and for the long call. So you can see that the debit on your trade is going to be the sum of what you pay for the call option and what you pay for the put option. So you'll pay $38.30 per share. And so for 10 contracts, which would be 1,000 shares, we're looking at a buying power effect of $38,200. So that's your debit on this trade. Now, you have a long call and you have a long put. So the call will make money if Priceline goes up, and the put will make money if Priceline goes down. For the profits that a call is making, you got to bear in mind that your put is going to be losing money, and vice versa as well. If Priceline is going down, then your put option is going to be making money, but your call option is going to be losing money. So how does this trade make money then? What is the attractiveness of this trade? So let's take a look at its risk profile. And that's what the straddle risk profile looks like. We've got the 630 strike price right here. And then you can see that both on the upside as well as the downside, there is profits. So, this trade looks very good, right? I mean, if Priceline moves up, you make money. If Priceline moves down, you make money. So what's the problem in this trade? Well, let's look at that. First of all, the danger zone in a straddle is always this valley of death. This V-shaped triangle here, you can see that that is below the zero line. That's always going to be your problem area. And because you have two long options, you're going to be theta negative from both of those options. So you can see that you're losing $595 per day on this trade if Priceline doesn't make a move. So for each day you hold the trade, you're going to lose $595. So that's one negative. The second negative, well, it's not really a negative. It depends on your volatility outlook. The straddle is a Vega positive position. So you have a Vega of 1487 on this straddle. So which means if volatility increases after you've put on this trade, then your position is going to make money by 1487 for each 1% move in volatility. However, the flip side is that if volatility goes down, then your position is going to lose $1,487 for each 1% move down in implied volatility. So that's the problem. Those are the two problems with this trade. However, if say in the next 3-4 days, Priceline makes a big move to the upside, then what will happen is the 630 call, will start making a lot more money, and it's going to have a much higher delta. Bear in mind, both of these positions are starting at around 50 deltas because it's at the money. But let's say Priceline makes a big $20-$30 move and goes from 630 to 660. You can see by the white line, your position is going to be profitable by $9,000. And that's because your calls are going to increase much faster. It's going to have a higher delta. And your puts are going to be losing money. But the good thing is that your calls are making much more than what the puts are losing. Similarly, if Priceline goes down, then your puts are going to be making money. Your puts are going to go in the money, and your calls are going to go out of the money, and therefore your puts are going to be making more than what the calls are losing. So that's the basic dynamic of a straddle. But there's a lot more to it than this, and it's best to understand this trade very well for all the different parameters and how exactly one side loses and the other side wins, take a look at our courses. The links are posted below this video. If you have any questions, please leave us a message on this page. Thank you.